Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we'll be looking at the definition of preferred stock or preferred shares. As we do in each one of these fundamental analysis tutorial videos, I'll give you the actual definition, and then we'll go on to look at some examples and give you a little more insight into what it's actually telling you on the balance sheet. Preferred stock is a type of ownership in a corporation which has a higher claim on the company's assets and earnings than common stockholders have. Preferred stock generally has a set dividend which must be paid out before or ahead of dividends to common stockholders can be paid. And preferred shares usually don't have voting rights. So when you hear the word preferred, you know that they're referring to those preferred shares being preferred ahead of common. For this example, we'll be looking at the Walmart Stores Incorporated balance sheet, annual data here. We'll scroll on down to the third section on the balance sheet. Under the stockholders' equity, you will find preferred shares listed. We got the old tools here. All right. You can see in the stockholders' equity is broken down to several different types of equity here, and you can see that preferred stock is one of the items listed here. And you'll notice that on the Walmart balance sheet that we're looking at here, there is nothing out there. They don't actually have any preferred stock out there, and that's an important little piece of information for you to know. Again, as the description I've given in the previous portion of this video showed, that preferred stock has preferred status above common stock, not in that it's a better investment necessarily, but that it has certain rights that come before common stockholders would see their rights met. In the situation here we're talking about, let's say that Walmart were to actually go bankrupt. The first people that would get anything would be the bondholders. Anything left would then be paid out to preferred stockholders, and then after that was all met, then common stockholders would get anything if anything was left. So that's important to note. Also, the same would apply to earnings. Once earnings are made in the company and the company decides they're going to pay out a dividend, the first people to get the dividend will be preferred stockholders, and then, of course, common stockholders. And we mentioned also in the redeemable preferred shares, we kind of went into this, but we'll cover it again here in the preferred stock section. If the preferred stock, and there's different ways to actually write up the benefits of preferred stocks. You need to actually read whatever it is, whatever company that you're actually investing in. If you have preferred stock, you need to know that not everything I mentioned in this particular video will pertain to every preferred stock out there, because there's some that are cumulative dividend and some that are not. So in the case that you were talking about a preferred dividend, preferred stock with a cumulative dividend right, that would basically mean that if Walmart were to pay a dividend, then that preferred stock would get it first, and then common stock. But if Walmart were to say, you know what, we can't afford to pay a dividend for the next 3 years, and they decide not to, then nobody would get a dividend. However, preferred stock would basically get an IOU saying, we'll pay you your dividends that we're supposed to be paying you at a later date and time. So then 3 years pass, Walmart decides they're going to start paying dividends again. All the back dividends would have to be paid to preferred stockholders, as well as the current dividend before common stockholders could actually start getting the dividend. So that's important to note. If you were to see a number out here on the preferred stock section, the stockholders' equity on the balance sheet, and it were larger than you saw over here, you would know that they had been selling or issuing more preferred stock, and that's why this number would be growing. If it were decreasing, you'd know the opposite. You'd know they were buying back their preferred stock, and therefore it would be decreasing. The way it's actually listed here on the balance sheet, this is going to be listed according to the number of shares sold at their par value. So it's multiplied by par value times units equals X. So if the par value of the preferred stock was $10 and they sold 1 million shares, then it would be $10 million we listed here. However, most of the time this stock will actually be sold for more than par value. So that excess amount that would still be gained by the company would have to be reported somewhere. That would, of course, go to capital surplus, and we'll get to that when we do the video on capital surplus. But the main thing is here, that's what you'll be finding here. A lot of times people will see these numbers and very small, and they think, wait a minute, I know this company is much larger than that. Where's this money actually been going? Because they're not selling these preferred shares at actual par value. So that's something you should keep in mind. One last item that I'd like to bring your attention to regarding preferred stock is preferred stock is basically a hybrid or a mix between a common stock and like a bond, because it has a basic degree of set interest rate or dividend rate that will be paid, and then it also has some access to the common stock benefit, being that it's actually going to be able to appreciate over time with the company if the company does well and so forth and so on. So that's kind of a mix there. It's been argued both ways. I mean, some people will argue that preferred stock's better than common, and some people will argue that no, it's not. In my personal opinion, preferred stock, if you're going to the point of saying I'm willing to take stock in a company, then you've already done your homework on the company. You've already decided that they don't have an overextended balance sheet or some other scenario that's troubling to the company. Ergo, you're fine with the common stock. The only reason why certain people do prefer to take the preferred stock would be for the actual yield would be better than perhaps the bonds that you might be able to take advantage of, but they would also have a little bit of the upside there. So again, you decide for yourself, but don't just think that because the word preferred is there before the word stock that it's therefore better than common stock. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.